proper covenant around, taking that money back, not waiting for 5, 6, 7 years for the project to get fully completed and then share the upside. So they're ready to give up the upside, but then they want kind of, quarterly money coming back. Now those instruments are about, 17, 18%. So they are high yield instruments for investors. And the way to think about it is that rather than putting in one high yield bond to a developer, you are actually putting money in a pool of those sort of loans to these developers. So that category has seen some interest because, again, with the broader interest rate structure coming down, a pool of assets that are giving you 18, 19% in debt form is attractive. So I think that's again seeing traction.
It's an asset allocation call once again.
Yeah,
so
it is an asset allocation call. You have to control it very tightly. You cannot really go over done on that. So you have to control, maybe 5% of your assets. You do need to realize that, risk goes hand in hand with return. So you put in, any money in a 18, 19, 20% asset class, you will have risks. You may not see all the risks on day one, but they are all going to come around at some point. So, just control the asset allocation and have the suitability. So, again, difference between, the investor risk appetite and even the net worth of this, the investor has to be kept in mind because, so if you follow the suitability and the asset allocation, which is meaning controlling the exposure, overall exposure, I think it's a valid instrument. The AIF fund category by itself, it's only open to 1 crore ticket size. So, that in some way does the self-selection for the right investor.
Vineet, come in here. So, AIFs are products which are yet not available on, mass digital platforms, as we've heard a lot of people talk about in the previous panels about mutual funds being available through these platforms. So do you think there is viability, or are these products too complex to sort of be offered through digital platforms?
So there are two parts to that. One is, is the execution itself complex?
Right.
And the other part is whether we believe that the client is going to understand or be able to really make a decision on a digital platform without too much of personal interaction or understanding the product in more detail. So whether the transaction can be, brought into a online platform, my answer is, if not today, over a period of time, with Aadhaar, e-sign and everything else coming in, it would be very much feasible. For example, on our platform, at least the feedback has come online now. So if you can, you complete the transaction offline, but you are still able to monitor it online. So, that part has started. Doing the transaction online also, I am very confident the way digital world is moving, it won't be too far away that, that can also be brought in online. But still the angle of, whether the client is able to really understand the product, whether he's able to, understand the nuances or the risk involved, or, what does it take, et cetera, all the things that Atul also spoke about. So I'll just say, why this category has gained a little more importance is two prime reasons. Why? Because it really gives you a solution which normally a mutual fund is not able to give you, because it's more concentrated, it's not as diversified. It gives you solutions like absolute returns, et cetera, which a lot of mutual funds are not able to really, give that, I would say, closed kind of a solution. And it kind of, different fee structures also enable you to, really get a participation from the fund manager or the, the house which is issuing it also as part of it. Second is also the advisors also look for, a unique story to build in, and not just mutual funds which become more of commodity. So an advisor also likes to have something which is more unique to him, and, it's for the investor, if he's looking at a more or less customized piece, or, much more closely customized for him, he also prefers it for his own needs. And so this is still a very interactive and an interactive process, and which will be difficult to bring in on an online platform at this stage.
Right.
Unless there could be, some funds which are kind of ever-going fund, like the long-short funds, which are always available, or which are always have a same story, have a track record. So those are something which might be easier to bring in on a digital platform in the beginning.
So still something to watch out for as it evolves, the whole platform. In the interest of time, I think the last section is very important, and what we need to touch upon is transparency and customer protection. And I think, Ramesh, maybe we can start on the real estate space, because their regulatory changes are really dictating this aspect. But the RERA, state-wise is going to be implemented and adopted. So is that going to create some Because we know broadly it's going to help investors and home buyers. But the state-wise, is that going to create maybe some blocks in that sense? Because it's very important. People don't have very clear avenues of redressal.
Very good question, Lisa. India used to be ranked 48th in global transparency in real estate 4 years back. Or in the last 4 years, our ranking has gone up from 48 to 36th. So that's a great sign that the Indian real estate markets are becoming a lot more transparent. Second is an indicator of transparency is also foreign direct investment coming into the Indian real estate market. The last 3 years, FDI into real estate has actually gone up from 2.5 to 4.5 to $6 billion. Again, a good indicator that markets are becoming a lot more transparent. Modi's done a phenomenal job getting in RERA. Demonetization will again work. Okay, there is short-term pain, but in the long run, today there's so many new institutional investors looking at Indian real estate who may have even never heard of before, who want to invest in India because they've heard good things that post-demonetization, the markets will become a lot more transparent. So RERA, demonetization, more FDI coming in, Benami real estate proceedings which the government is going to start very soon. All this is definitely going to help the real estate market become a lot more transparent. REITs coming in. So all this, the government again is focusing a huge amount of focus on affordable housing, making the industry a lot more institutionalized. So good times for real estate from a transparency point of view. Never seen the Indian real estate market. So used to be an opaque market, became like a translucent market. Now it's becoming like a semi-transparent market.
So still some more work to be done, but
Definitely,
it's
but
moving in
huge
the right
amount of
direction.
improvement in the last
Right.
4 years in terms of transparency.
So in case of gold, one knows what one is buying. You can have the carat and everything specified to you, can get a certificate. So is that one of the appeals that a savings-oriented country like ours has for gold? That it's safe, you know what you're buying. There is no hidden aspect in that sense.
Yeah, actually, contrary to that, the undercaratage is the highest in India. If you look at any
Yes.
globe, people actually, on an average, lose. We did a survey, 15%. So you don't have to worry. Everybody will lose 15%. Okay, and you save. If you see, even if you pay by cash and don't take a bill, you save hardly 12% tax because all the taxes together are 12. So consumers haven't really been made aware of this, and 90% of this industry is done in cash. That is the other big thing, because people somehow had this fear that it's not that they were always buying it with unaccounted wealth, but somehow they needed a little bit of obscurity when it came to buying gold, which is now probably going away with all these cash limits and 200,000 and PAN card, etc.
Right.
One of the reasons why demand fell last year, because consumers and trade haven't adjusted to it. But as the council, we believe that this is just going the China way, where not only will transparency come into the jewelry trade, it will also be picked up by the financial sector, because in China, banks are the biggest sellers of gold. I mean, you want to do a gold saving scheme, you walk into a bank, you don't walk to a jeweler. And then you say, I will deposit for 2 years. ICBC is the biggest one. So we believe that will automatically move, and gold-based financial products will come into the Indian system through the banks, and that will also improve the transparency. And it will be good for the consumer. Awareness is still not there.
Right, interesting. Manish, very quickly, I want to talk about alternate investment funds. And there the issue is not really about transparency in this sense, but about how does one know which fund is better than the other? And, really the buyer is at a loss on this front. So quickly, can you address this? Like, what more needs to be done?
Sure, you're absolutely right, Lisa. We don't have the luxury of having a very long track record. In US, I can actually look at all vintages starting 30 years, 35, 40 years back and tell you how each category performed and what was your alpha over the listed market, because that's the most important parameter you look for. In India, we don't have that. So, and I'm talking about last 7, 8 years when some of the advisors started individually trying to build in models to assess these funds. In Waterfield, we have a very clear understanding. All AIFs are very people-centric. It's people who are assessing startups, especially in the VCPE space. I'll keep the hedges and all out because they are just risk aversion or absolute return strategies. I'll keep them out. So assessing funds become a combination of an objective and a subjective parameter. So objectively, you can look at the background of the person who's managing it, the background of the earlier performances of funds. And again, a lot of transparency is a problem because funds talk about gross IRRs, whereas net IRRs are very, very different because the carries are very high in that space.
Right.
So transparency also on reporting, because on valuation particularly, I was just meeting one venture capitalist just before this meeting, and she was sharing that, you know, the way valuations are being done today to sell funds, because you have to show a very good return in the past fund. You can do just take another third party and do a small valuation, just tell them that you are 3.5x your return, but there is no law which tells you that this is the way valuations have been done. If you remember historically, CRISIL bond matrix came in after years
Yes.
where a lot of fudging happened in
Yeah.
mutual funds. I think we're going towards that space, but even now it's a combination of getting the track record of the individual managers who are managing is, and not particularly what they invested into, but how much exits they have done. That's becoming important.
Yes,
So
yes.
some of the family offices like us do that for the funds as well. And finally, I think the transparency or assessment will be when SEBI comes out with guidelines, hopefully next year, about what reporting structure an AIF should have. Because today there is no public data available to compare AIFs. So we have to maintain our own repositories of 40, 50 funds and keep on adding to that. I think so we are very, very initial stages at this point of time.
Okay, so opportunity there, but transparency is still buyer
It's a big problem.
beware.
There are
Yes.
very number of bad funds out
Yeah.
there, so you need to be careful.
Okay, gentlemen, in the interest of time, very quickly, only just one last thing, and this is just a one-word thing. So all of you all will just, between real estate, gold, and alternate funds, your pick for FY18, and Munish, we'll start with you.
We've been very vocal about it, and we will be vocal about it. Maybe the class of people that we manage, which is ultra high net worth families, already have a lot of real estate, already have a lot of gold. Our set of families are very, and like Atul said, it may be 5% of the portfolio,
Right.
but I can tell you 60% of the conversations happen around the alternate space,
Okay.
because they want to have an actual uncorrelated asset class. See, the global financial part of 2008, the crash, showed us that all asset classes went down together. So there was, uncorrelation was not there. But in the venture space, in the PE space is what one area we are looking for with the valuations now the way they are and the concerns about valuations, I think it's a good time to come back into the market and start looking at investments there. So venture
Great.
capital, early stage, to a certain extent, the Series A, Series B kind of investments.
Vineet, your pick.
So I wouldn't want to take a pick on this because it's very individual focus and there's a portfolio allocation
See,
approach,
your
etc.
pick. We want your pick. Munish
Yeah.
gave a very, corporate answer, but we want your pick.
Yeah, so I would say real estate is slightly heavy right now, so commercial real estate looks good.
Yeah.
So if you're getting into commercial real estate, maybe a good opportunity to get into it. Gold seems to be pretty okay for a long-term angle.
Yes.
Alternates, if you understand, yes. If you don't understand, then stay away for some more time.
Okay, great. Thanks. Atul?
So unconstrained, I would have said listed equities, but
Yes.
between the three that you post, alternatives, AIF.
Okay, great. So, or do we know the answer already?
Yes, I know gold more than the other two, so I'll
Yes,
go with gold.
comfort.
Office in Bangalore, Pune, and Bombay, and residential in Pune, Hyderabad, and Bangalore.
Wow, that's a lot to work with. I think a lot of opportunities pointed out by our panelists. And we have, I think, 1 or 2 minutes if anybody has questions.
Good afternoon, everyone. This is a question for Som. Gold Sovereign Fund, 8 years. Will it double? 28,000, 29,000. Will it go to 60,000 in 8 years? The government scheme?
Sorry, I didn't get the question.
Yeah, I didn't hear the first part of it. I think it was a bit.
Yes, the Gold Sovereign Fund,
Yes,
brought out by the government of India.
yes.
The range right now is 28 to 29,000. And it's a 8-year scheme with exit at 5th year. In your opinion and expertise, will it touch 60,000 in 8 years with all the benefits there?
Yeah, you're indirectly asking me to forecast gold price.
Right.
I'm not going to do that.
Expert advice. It's an expert advice. Non-committal.
No, but you see, long term, given all how the fiat currencies are behaving and the uncertainties, the expectation is that gold will never fail the investor. I would leave it like that. I wouldn't want to put a figure on that. You see all the central banks buying. It will be much better to ask a central banker why they are buying gold.
So I'll just add a little bit of element to that. So Usually it's a hedge against inflation, so you should look at it from an inflation angle. But if there is an uncertainty anywhere in the world which happens, then it could be sooner than that also. You never know.
Great. Great. Thank you very much, everybody. And
Thank
if
you.
any questions, people can take it offline as well.
Thank you, panelists and Lisa, for this very interesting discussion.